China is emerging from the crisis at the Strait of Hormuz with clear economic and strategic advantages, at least for now. When the war between Israel, the United States, and Iran broke out in February and the Strait of Hormuz was effectively closed, China protected its economy by relying heavily on its vast 1.4 billion barrel strategic petroleum reserves. It has also built alternative sourcing for many of its key commodities since then. Where it hasn't, its domestic industrial base can fill the gap. This is how China can insulate itself better from energy price shocks than many of its neighbors. On top of that, Beijing's fiscal and monetary toolkit provides short-term economic insulation. After all, they have tools at their disposal that can be deployed without facing the same electoral pressures that democratic governments do when making unpopular choices.
China may be one of the best positioned major economies to weather this crisis. That's not because China is immune to higher energy prices. It's not. But Beijing entered this period with substantial strategic reserves, diversified suppliers, and a political system designed to absorb shocks.
Let's take a look at a few Chinese industries that are most directly exposed to Hormuz-related disruptions. First, petrochemical and plastic manufacturing. China needs naphtha, a product refined from crude oil, to make plastics, synthetic fibers, and industrial coatings to export globally. 39% of China's naphtha transits the Strait of Hormuz. The disruption in the strait has already slowed down production and driven up the cost. In turn, plastics output has slowed, which could disrupt a broad set of industries from medical devices to consumer electronics to packaging.
Independent refiners, petrochemical producers, parts of the chemical sector are seeing the greatest pressure. We've already seen refinery run cuts, supply disruptions, and a tightening availability of certain niche industrial inputs.
But Beijing has the ability to cap domestic prices for these inputs and to put export controls in place to secure domestic supply. All of this allows China to prevent major disruptions for the next 2 to 3 months in hopes that the situation in the strait resolves. Second, semiconductors. China needs helium for this industry. Helium is an irreplaceable gas for cooling, chip printing, and keeping manufacturing environments contamination-free. As Beijing pushes for tech independence, semiconductors have become central to that ambition. But it's an ambition that has a vulnerability.
China remains heavily dependent on imported helium used in advanced chip production, much of it tied to Gulf supply. That's manageable today because companies can pay higher prices, but if shortages emerge, the issue could become more strategic.
While helium supplies are holding for now, if shortages were to emerge, China could use its state resources and its geopolitical leverage to secure additional supplies, even if that means buying above market rates, including from Russia. In addition, China could ramp up its domestic helium production. Yes, it would take a long time, but in the long term, increased Chinese helium investment and capacity would make China's semiconductor sector significantly more self-reliant, an ambition that Beijing has long pursued. Turning to agriculture, chemical inputs for fertilizer, including ammonia and sulfur, flow through the Strait of Hormuz. 56% of China's sulfur comes through the strait. If the disruption there continues, Chinese farmers could face higher fertilizer costs, which in turn would lower crop yields and lead to higher food prices for consumers. However, China is the largest ammonia producer in the world, making it somewhat more insulated from Hormuz shocks. Additionally, China's coal-based chemical industry gives it options that other neighbors don't have.
China's economy is more resilient. It has deeper reserves to be able to weather such a storm. It has invested more in renewable energies, and they have other options to deal with at least temporary shortages. They've also played a careful role diplomatically behind the scenes. And so I think it is clear that both economically and politically, China emerges perhaps from this set of circumstances more influential, and I think we judge them to be, in the short term, clearly emerging in a better place than other countries.
What's clear is that the Hormuz closure has created openings for China. Beijing's relative insulation and its dominant green energy, electric vehicle, and battery industries provide China with a chance to demonstrate its relative economic strength among other developed countries. China's 15th five-year plan, published in March 2026, already committed to long-term support for green energy initiatives. This crisis could put their clean and renewable sectors into a stronger position as other markets diversify their energy mix to hedge against future disruptions.
The biggest beneficiaries are China's clean energy sectors. Every spike in global energy insecurity strengthens the case for electric vehicles, batteries, solar power, and broader energy diversification. This is particularly important because China already dominates many of these supply chains. In some respects, the prolonged disruption accelerates trends that were already moving in China's favor.
The real threat to China is not the oil shock, but what comes after. If high energy prices persist and drag the global economy into recession, demand for Chinese exports collapses. Southeast Asia, China's key manufacturing partners and customers, would be the hardest hit. For Chinese companies, that means vanishing orders. On top of that, China's export-driven growth, which was already under pressure with Europe and others pushing back against cheap Chinese goods flooding their markets, would face an even tougher road ahead.
So that's where the risk becomes more serious because China's growth model still relies heavily on exports. If global demand weakens significantly, the challenge becomes much harder to offset.
Even with those threats, Beijing is confident in its ability to manage those pressures over the medium term. Beijing doesn't just see pain points. It sees a chance to fast-track renewables, deepen ties with the global south, and cast itself as the stable partner of choice on the world stage. For Beijing, these vulnerabilities are real, but manageable. If anything, it sees the crisis as the ultimate validation of its industrial self-reliance strategy. And the question is not whether Beijing will be able to cope with the disruptions in the Strait, but how long it will have to. This video is part of the No Safe Harbor series by the Asia Group, a report on the consequences of the volatility at the Strait of Hormuz for economies in Asia. You can watch the rest of the videos here and read the report at straitofhormuz.theasiagroup.com. Thanks for watching.